Hi, everybody. Wagner Alaska here. Thank you so much for attending the webinar. I'm just going to give it one more minute so everybody can start logging in, but I really appreciate you guys being here today. I see some names here that are very familiar with who we are. I have some of our actually approved mortgage lenders as well attending the webinar. Today we have over 100 signups. I mean, I just don't know how many people are going to be attending, but it's really important for you guys to know what are we going to be talking about and everybody else. So thank you so much. In another minute, we're going to get started here. Hopefully I can see people from Florida, California, Utah. Let's see what else. Oregon, that I know, some old investors of ours as well. Thank you for being here. Nice. Very nice. Thank you for being here. So without further ado, we're going to get started. I'm going to go ahead and share my screen with you guys. And here we go. Today we have some amazing news that I wanted to bring it live to you. Well, if you know us, we have been in this business for a long time. Overall, I'm a personal investor. I invest in real estate myself. And the most important thing is really, Wagner, what can you actually do to improve my cash flow? What can you actually do to improve my experience when I buy a property? And the answer is combining the most amount of services in one location so we can really be the one-stop shop or the turnkey provider for you. With that in mind, we actually just got started with WNG Insurance. What's that? Well, we are now able to provide insurance rates lower than pretty much almost anybody else in the market for you, investor. Why would we do that? Because you deserve to have a better cash flow. And our insurances are going to be, we chose to have lower commission rates than actually anybody else that we know. So you, the investor, can actually make more money and pay lower amounts on your policy. We're not actually offering insurance for residential homeowners here. We're just offering for investors, but those are the same insurances you'd buy from anybody else. We work with American Integrity, and you're going to see that here in a minute. I will actually talk about Build to Rent Direct a little bit, Wagner Alaska, and also property management. As you know, property management can make or break your deal and your property, your investment property. So property management, guys and girls, it's super important. And just to actually share some stuff with you guys, I'm going to tell you how much vacancy do we have? How much do we charge? Everything is going to be fully disclosed here today. I really appreciate if you took the time to watch. So give us about maybe 20 to 30 minutes, and then we're going to open up for Q&A, and we're going to try to answer all the questions you may have why you should invest in Florida. So let's get started. I really appreciate you guys being here. Some of the most important is, what's the homeowner's insurance? Well, if you wanted to actually have a property that is financed, you are obligated to actually have homeowner's insurance. If you have a property that is paid in full, you're not obligated, but it's highly recommended that you actually have insurance. And usually it's one of the best investments you have on a property is insurance. Well, in Florida, it's mandatory. People keep asking us, what about the hurricanes, Wagner? What about this? What about that? Well, if you live in California, you probably have a lot of earthquakes, right? So insurance of earthquakes in California are optional. In Florida, every carrier that actually sells homeowners insurance is mandatory for them to supply hurricane insurance included with your policy. So that's a big, big, big information for you to consider when you're making the purchase of insurance or to choosing your provider. So what's the difference here? If you buy insurance from anybody else, from any broker, they usually make a commission from the carrier, from the person that is actually issuing the policy. In our case, we work with several ones, but one we actually work closest is actually American Integrity. So it's the same insurance. The only thing we did is no middleman. We have no more middlemen making those big fat profits in the middle of the way. And that actually is going to increase by giving you more cash flow on your property. That's why we do it, because we already sell you the property. In some cases, we build the property, we property manage for you, and we wanted to actually sell the insurance. So one phone call solves pretty much all the problems you have. We're here to fight for you, our investors, and that's why we're here. Here we go. This is a perfect perfect scenario of an insurance that actually I quoted for one of the properties that I personally own. And I wanted to tell you a little bit about it. So this policy here, I was actually paying a premium of probably about $700, $600 to $700 a year. Without my commissions, the amount of commissions we took out for the same policy. This is insurance a $250,000 single family home. The premium actually is $272. We have additional coverages which are included on the premium, which is the structures, 2% of the structure. Personal property, we don't have anything included. Loss in use, we do have $25,000 included. And we have mold and fungi and dry root, which is $10,000. Remember, when you buy insurance, you got to understand that flood insurance is separate. But very good thing for you guys to remember is the best flood zone that is approved by FEMA, which is a federal organ, is actually flood zone X. That's the only way we build. It's on a non-flood zone. So I don't buy insurance, flood insurance for my properties. Doesn't mean you don't have to, but it's just what I do for my properties, right? So if you take a look at the personal liability and also the medical payments, we don't have it. Wind loss mitigation credit, $884.35. Why? Why, Wagner, were you able to drop over $800 on a premium on a policy for us, the investors? Well, number one, because we build new homes. So everything we build is 2021 to 2022 new construction. They're up to code. So you don't have to do an additional inspection for wind mitigation, for four corners, 4-point inspection in your house, if you actually probably know about that. And just a very, very important number. We actually are 60 to 70% cheaper on insurance than an existing home. So if you wanted to quote us for your existing property, remember, it's not the same price, it's not the same premium, it's not the same rules and regulations, but $301 per year on insurance on a 3-bedroom, 2-bathroom Ocala house. It's crazy, right? And this is for 1 year, 12 months right here, right? Unbelievable. Let's move on. If you guys have any questions about insurance, please make a note or start sending it to us. We're going to cover that as well. But there's nothing more important right now than insurance, interest rates, property management, so you guys can actually make some money on the existing inventory that we're selling. So mortgage rates. Historically, you can see a graph here that was provided by a good friend of ours, which is Highlands Residential. You can see that in about 1970, we were at about a little bit higher, maybe close to 5.5%, 6%. And we have a lot of moving parts here as far as the mortgage insurance rates. In September 2020, if you know, you're probably refinanced or got a mortgage in your house, you probably paid 2 to 2.5%, 3% max. Here, where we are today, we are actually above 4% in January 2022. I don't have the March graphs, but we expect to be above 5% again. What does that mean for you? The only advice I have for you as far as mortgage rates is this. I bought a property in 2005 and I paid $480,000 for the property. That property in 2008 was worth $80,000. I kept the property, I rented it, I renovated, I put granite countertops, I put paint. I still have the property today. That property is actually being appraised for over $920,000. What does that tell you? I had a 30-year fixed interest rate. So the tenant for the whole time in the duration of the rental was paying for that property for me. I wasn't paying the mortgage. It was all coming from the rental. So as long as you have a fixed 30-year fixed interest rates, you know, we are still in great times to buy. Interest rates are great. And remember this, we're not going to talk about inflation here, but your purchasing power is so important. For example, we are now, the last numbers we got in March are 8.5% inflation. Wagner, what does that mean? Well, last year in 2020, we were actually, if you had $100, your $100 were worth $100. Today, if you actually apply the same level of inflation of 8.5%, your $100 has the purchasing power of $91.50. Really important. And I'm sorry that I'm not going to tell you very complex terms here on interest rates and mortgages, but I'm a simple guy. I like to tell you how it is. So your $100 in 2020, 2021 are now only worth 91.5. And I have a friend, I'm not going to tell his name, but he started, well, I can tell his first name, Bill. He looked at a property with us in Palm Bay, and he probably, at that time, if I don't remember correctly, the property was actually valued at $195,000 or $200,000 for a 4-bedroom single-family home in Palm Bay. And I know you're watching because I saw your name here, Bill. That property today is being appraised for $345,000, right? So when you see appreciation like that, and you have a 30-year fixed interest rate, you have your mortgage under control, you have a great property management with minimum or 0% vacancy. That's what you're looking for. So you gotta lock your interest rates. Why should you lock your interest rates? Very simple. The Fed already announced that we will have between the next 12 months, 5 to 6 raises. Could that be a quarter of a point? Can that be half a point? We don't know. Nobody knows, right? Not even the Fed knows. It's going to depend how the economy reacts. We know the stock market just, retracted a little bit recently. So the only advice that I can for you is this. We custom created a mortgage plan with our partners to give you, investor. Let's just say that you want to buy a single family home today, but that house is under construction. It's probably going to take you 8 to 12 months, but you want to lock your interest rates with today's rate. Today, I want to, wait, Wagner, what's the rate today? We don't do the mortgage, but we have 3 approved lenders that do it for us. The rate is, I'm just going to guess, 5%. You want to lock it in your rate in today's rate, you can for up to 12 months for a fee, of course. But imagine if you are able to actually buy a new property, close on that property in 12 months and guarantee your rate today. Question. What happens if the interest rates go down? You will get the credit. You're gonna get compensated for the difference. So you're never gonna lose on this, but it's a huge insurance value for you as well. So you can put your head on the pillow and just rest. Enough about bad news, interest rates, things like that. The good news is this, you can lock it today for up to 12 months. What do you need to lock your interest rates for 12 months? You need a property. Without a contract, no mortgage lender is going to lock your interest rates, right? You got to have a contract. You got to have a property that you're under contract so they can actually give you a pre-approval. You can actually apply for the loan or at least get started and lock your interest rate. So we actually have a very, very, very successful project, which is Bennah Oaks. And we're almost done with phase 2, but I just wanted to show you guys a little bit about the project, the amenities. I'm not going to talk about the cash flow today. Here we go. Let me see the amenities. Let me talk about the amenities first, and then we're going to get onto the, the meats and potatoes of the project. This is going to be a 419 single-family home project, and this project in particular has kids playground, community pool, community gym, gourmet kitchen, dog park, pickleball court, tennis court, game room, walking trails. It's absolutely amazing. It's about 10 to 12 minutes from the villages, very close to the villages. I'm going to show you in the map. Why am I showing you this? Because what we have seen, the trends in Florida are people are moving away, they're moving out of apartments, and they're moving in to single family homes. People are working from home. They want more space. They're actually are starting to appreciate a little bit more elbow room. So they're coming to single family homes. And we are developing build-to-rent communities to accommodate with the amenities that they could only find in the apartments. That's why I touch on the amenities first before talking about the project, because I thought it was really, really important. Let's talk about the numbers. Really important. 4-bedroom, 3-bathroom, 2,093 square feet, 2-car garage, brand new construction being built to be delivered in March 2023. Minus plus, 2-car garage, as I says, concrete block construction, Tenant Resilient, concrete block construction, stucco on the outside, waterproof vinyl flooring, granite countertops, LED lighting, ceiling fans, blinds, all included for you. Professional commercial water heater. Here we go. This property is being sold for $299,000. Today's market price on this property, if it was built, $349,000. I'm going to show you an appraisal from CBRE, which is the largest real estate company in the country. So here we go. I calculated 5%. I just got a loan for 5%. I'm not sure if that's actually what's going right now, but it should be right there. Maybe a little more, a little less. You do need 20% down to lock in the property, and that's going to be part of your down payment, even if you're paying cash or if you're actually having a mortgage. Your principal and interest is $1,284.08. Property taxes, insurance. Take a look at this. I put it $43 per month, which is superior than what you saw it on the quote of $301. Why do you do this, Wagner? Every number that I have here is extremely conservative. Extremely conservative. And I have purchased Bennah, actually phase 1, and I'm purchasing phase 2 as well. So I'm going to be your neighbor if you purchase a property in Bennah. HOA $50 a month, that's an estimate. Management fees, $176 per month if the property is leased. Total monthly payment is $1,926.83. We're expected to rent this house for much more than this, but this is very conservative. We usually do a rent range of $2,200 to $2,300. So your positive cash flow is between $273 and $373. This is after all your expenses paid. Please read the disclaimer. We are actually not giving you advice here on what to do, with interest rates. This is just an investment opportunity that we believe to be correct. And we actually invest. We eat from our own cooking. So we invest everywhere we sell. Really, really important. Here we go. As I had promised, appraisal report. If you take a look, this is the name of the project, Bennah Oaks, single family home subdivision, the address, the CBRE file number to show you that this is actually for this particular project. Here we go. The bank. So let me explain to you why do we have those reports. So the construction loan requires us to actually obtain periodically reports of pricing. So they know that the amount of money they're lending us to build those communities are going to come back somehow when the houses continue to appreciate and be good. So the three bedroom, 2-bathroom, if you purchase from us, you pay $225. They're actually telling us right here that the house is asking a price on today's market, not even when we're going to be delivered at $275. $275 for a 3-2. We sold it to our investors. We're sold out of phase 1 for $225. 4 3s, today, $310. And as soon as the house is getting ready to be concluded, they're actually assuming that it's going to be at $324,800. We have comps today of $349,000. Remember, this is for construction cost purposes, right? Look at this. Annual inflation. 3% a year for 2 years. Who can get those interest rates? So we know that this cost of construction is going to be way higher than what they're actually telling us. And the total amount of the project is going to be actually, the appreciation is going to be superior of what CBRE tells us. The most important thing from us here, guys and girls, is full transparency. We always show you what we have, where we are on every project, because we wanted to make sure you feel comfortable making your educated decision. Where is Bennah Oaks, Wagner? Where is Bennah Oaks? Well, if you're familiar with Central Florida, we are one of the largest markets in the country, one of the largest net immigration markets in the country. It is right smack in the middle. So here is Orlando, where I live. This is Bellevue. The project is actually adjoining the public library, Bellevue Public Library, and we actually have right here the Villages. It's about 10 to 12 minutes from here. I have a video on YouTube. I'll be more than glad to share you a link of the area, what the amenities are, what Publix is located, what supermarkets we have, what liquor store, everything. I did a video about it, so I can share it to you. But it's right in the greater Ocala, Marion County area. One of the fastest growing MSA in 2021. That whole area is. And you have there for jobs, which is really, really important. You have Amazon, you have FedEx, you have Napa Auto Parts, Chewy. University of Florida has several hospitals there, several assisted living facilities, levels 1, 2, and 3, which is really good. So we love medical, we love distribution, and we love technology people. So we have those tenants in this area. I own several properties in this area. So I love this area. I'm going to continue to buy more. Here we go. Phase one, as I had promised you guys, it's fully sold out. That's for the 3 bedrooms, 2 bath. If you guys locked in one of the first units, 88 units, you actually paid $225, and you saw it, how much is actually appraising today for construction cost purposes, not by Wagner and his team, but by CBRE. Phase two, very low inventory, less units coming live. As you know, 4 bedroom, 3 bathroom, 2 car garage, 2,093 square feet for $299,000. Delivery is expected to be in March 2023. Why? We're now finishing the infrastructure and horizontal, and then we're going to start going vertical. We're going to start delivering phase one first, and then we're going to move into phase two. So it's about 8 to 12 months, the whole process. That's why we're now talking about March 2023. That's what's going to show you in a contract if you decide to actually purchase one of those units. I already discussed the amenities, nothing here to be discussed anymore, unless you guys have any questions. All these amenities are going to be included and maintained by the HOA. Here we go, property management can make it or break your deal. Here we go. We have an in-house property management. We open up the property management because we could not find in the market a company that cared for the investor and the tenant as we do. And why do I say this? Because we work directly with the builders, no middlemen. We can repair a house much quicker than anybody else because the builder already has the same vinyl, the same granite, the same paint, the same LED lighting, because if something goes bad in your house, usually when the first year is 100% under warranty. So we can take care of those problems much easier than an outside person from an outside property management company. So what does it cost for you to hire our services and to have everything turnkey? Just very important before I get into the numbers, we're fully licensed in the state of Florida. We have, I'm a real estate broker as well. I'm a builder, I'm a developer. Most important is this, we actually have a CAMS license, which is a Community Association Management license, which is the largest license you can obtain in the state of Florida for property management. So we're very blessed to have all the licenses, all the insurances, and those are the costs. 75% of the first month, the market charges usually the first month's rent. We charge 75% of the first month because you're an investor. We only charge 8% a month. Everybody that we know, with a few exceptions, they charge 10%. 10 or 12% a month on the rent that it's coming in. And for renewals, we only charge $150, and that's only for the attorney to look over the contract and to make those assumptions and changes. So 75% of the first month, 8% a month, and $150 renewal fee. No more hidden fees here for you guys and girls. That's what it is. We use Belleview. So you have your own login. We actually see your account, you see your property, you see any repairs that were requested, how much they actually cost. You actually can set limits, how much you want us to approve in case if you have a repair that needs to be done, so we don't have to bother you. It's a fully integrated, but most important, you can collect your rent. You can click on that button on that app and you can collect your rent. So my favorite date of the month, if you know me, it's the first of the month because that's when the rent is due, right? And we have 0 days on grace period. Just look at this, 0% vacancy. Every house we have under management is leased. That's amazing. And we're very proud of it. Not only lease, but our tenants, they tend to stay in a house between 3 and 4 years. Why? Because we have the newest, the nicest house on the block. Why would they move, right? And we charge a little bit more than anybody else. I mean, I'm just going to be very honest here. Our houses are not cheap. Our houses, not the purchase price, I'm sorry. On the rental side, our houses are priced very competitive, but yet a little bit higher because we do have a better product than anybody else. And because we have 40 to 50 applications per house. So we can pick and choose the best tenants for you, and they're willing to pay a premium for that to get the new house. So we have 40 to 50 tenant applications per house. Crazy, crazy, crazy. We use all the 3 major credit bureaus to actually make sure the tenant is qualified. We actually do employment verification. We call the employer, make sure the salary matches what the actual tenant is claiming. Absolutely, we do everything in-house. It's amazing. Probably you already spoke. A lot of people here spoke to our team, and we have a lot of praises. But if you need anything else to fix as well and to improve, we're here for that as well. It's that time of the day. Questions, comments. I'm going to go ahead and stop sharing my screen so I can read your comments and your questions, and please feel free to send it to us. We have a lot of them here. Here we go. So I just saw one from my friend Camilo. Thank you, Camilo, for offering help. So what's going on in Ocala? First question here. What's happening in Ocala that everybody's moving to that area? So let me just tell you what happens in Ocala. Before actually we go into an area in Ocala or anywhere else, we speak to the economical development team from the city and the county. We speak with the city manager or the mayor, and we try to understand who is coming here, what companies are coming here, what jobs are being created. So we just don't go to an area and build houses and expect anybody else to join. We really are very, very picky on how do we actually set up the area. So this is one of the fastest growing MSA for 2021. The greater Ocala area is, so absolutely very proud to own houses there as well and to continue to invest there. So it's right in Central Florida, and I'll be more than glad to send you a map with that information as soon as that call is done. Let's see, next question here. Wagner, why do you actually have property management in-house? It is such a difficult business to manage. You're right. I only have property management in-house because I'm an investor, and I am so tired of actually putting up with all this amazing fees that they're charging us, and they don't even give us the light of day. So I promised myself that I had a need that couldn't be solved by a local market. I created property management. It is a lot of work for us. I'm not going to lie to you, but it is the most pleasurable thing when an investor can call one place and take care of all their needs. So we have a property management specialist, we have an insurance specialist, we have a customer service specialist, we have our directors, our construction team, but it's a pleasure for us to actually be here and to integrate everything. Here we go, next question. Please keep sending us questions. Here we go, one more. Here we go. Wagner, why did you decide not to make a lot of money in the insurance because you're losing over $800 per policy? Well, that's very simple, because I make it on the sale. I make a little bit on the sale, right? So to be fully transparent with you guys and girls, I make money on how much money we sell of the properties. That's how we make, so we get compensated. So I don't have to make money everywhere. I can share a little bit of love. I can share a little bit of discounts with you guys and girls so you guys can actually make some more money on that. Next question, let's see here. Do you have any developments outside of Florida? Well, I don't. I have investments in Tennessee. I actually still have a large piece of land there. I sold every single family home that I had in Tennessee, in Memphis particularly, and I brought my money to Florida. We don't do anything outside of the state, but I don't know if you're listening here. I don't know if Adam is here, but I have a friend. His name is Adam Whitmore, and he's a developer in Georgia, Alabama, Tennessee. So if you guys are looking for property outside of my area, I can absolutely make a recommendation as well of other providers that can actually probably help you. Do you discount property management I'm sorry, let me read it again. Do you provide discounts on property management for multiple houses? Unfortunately, we don't. We'll give you a one price fits all. A lot of our clients, they don't only have one house, they have multiple properties with us, because that's the goal. It's a long-term relationship that we're establishing with you. So no, we have the same price, even if you have one house or a portfolio of houses with us. This is the lowest amount of money we can charge to still keep the customer service level that we want and that we need. So apologize, but no discounts on the property management. The properties as well, right? We usually don't give discounts. Discounts are already applied right at the beginning because you have the upside, you have the appreciation. So our prices are very, very good since the beginning, so you don't have to negotiate. Let's see whom else, if we have any more questions here. Here we go. I think we have one more coming in. Wagner, why are you so passionate about Bennah Oaks? Well, I own 2 houses on phase 1. I own 5 houses in Oklahoma and greater Ocala area right there. I think I have 1 house as well under contract that is not ready yet in Denellen. So I just love that area. Everything that I have there is tenanted. It's leased. 100% of my payments, my collections are on time. the quality of the jobs in the areas that we build and that we sell are amazing. That's what matters to me. It's the quality of the tenant and what's actually forecasted for appreciation, who is moving, what's the demographics like. I mean, there's a lot of numbers we read. Anything else on questions? Okay, we have one more coming here. Let's see. And just to let you guys know, and girls, we're going to be doing a webinar very soon with my friend Camilo Saab, only about interest rates and mortgages, okay? So stay tuned for that. Probably it's gonna be in 1 or 2 weeks, but we're definitely gonna cover that very soon for you guys and girls. One more question here. I think, here we go, let me see. What is the liability coverage and premium amounts for the home insurances? So let me do this. Let me find the presentation again, and we're gonna answer your question, my friend, because the premiums are right on the policy, and I'm gonna answer it live for you. Here we go, premiums. So the premiums, the limits are $250,000. Remember, this house is a 3-2, and I ended up paying for this house $224,000. My actually limit for that dwelling is $250,000, right? And that's the coverage that I have it under. Let me make sure that I answer all of your questions. Premium amounts, liability coverage. Okay, so premium amounts is right here, $301 for 12 months, and you can pay it in installments if you wish. And the coverage is $250,000. I hope I answer your question, my friend. And let's see, what else do we have coming in here? All right, we have one more question here. Let me read it. Wagner, you're also building in Palm Bay. What does that look like? Well, I have good news and bad news. The good news is sold out, and the bad news, I don't have any more inventory there. So, once again, people that are actually taking too long to do the due diligence, to make a decision, they're losing the opportunity because there's not enough inventory on the market. And this is exactly what I'm going to tell you. And if you're watching this webinar live, we just reached over 147 attendees on our webinar. So I really, really appreciate that. And this is what I'm going to tell you today. If you purchase a house today, or this month, or in the next week from us, I will give you for free 1 year worth of insurance. We're going to pay for your home insurance for up to 1 year. So this is the promotion that we're giving you in appreciation for your business, Wagner Olasco and the team, for you to be an investor and to buying a property from us. Of course, the Bennah Oaks insurance are going to be much higher. They're not going to be low because the prices are higher. It's a different house. It's a bigger house. It's a 4-bedroom house, three bedroom, not a 3-2. So let us give you that gift. If you purchase a house, if you click on the link that we're going to be putting here below, and you reserve your house today or this month, or in the next week or so, we're going to give you 1 year free insurance. Yep, you're listening it right, and it's recorded, and it's going to be on YouTube, so you guys can come back and just ask us for it. So a couple more questions here. We're going to have a replay on this Zoom call. Somebody's just leaving for work. Yes, we will. We're going to have a replay. It's going to be available, and we'll send you a copy. I really appreciate it. I don't see any other questions. I really appreciate everybody being here with me today. It really means a lot to us. Those live webinars are going really well. Thank you so much for being here. I really appreciate you guys. Do not sit around and do nothing. Take action. It's really important that you don't actually do those, analysis paralysis stuff. Select an area, even if you don't buy it from us, it's okay. Select an area you like in the country. Select an area that actually has positive cash flow, appreciation, that makes sense for you, and take action, invest. This is the only way you're going to hedge yourself against inflation is through real estate. And it's one of the only investments that you can put a $200,000 down payment on $1 million asset, right? You can't do that with bonds or stocks or anything else. Real estate, you can leverage yourself. Take advantage of that. That's going to pay up big time. Have an amazing day, a great week. And I'm Wagner Olasco. I'll see you soon.